one now. Whoa, 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 whoa. I'm Rodd Duff from Insights and Straight Talk. And with that, folks, I am out. Good morning and welcome to Insights and Straight Talk. Oh, by the way, I'm going to get into Jaden here in a second, but Jaden, I did forget to mention that I will pop off and pop on periodically as questions come up. So if I leave the room, I can hear you. I can hear you just like you can hear me now. But back to the show. Just trying to clean up some of the earlier, oops, I forgot to mention that part. Good morning and welcome, folks. This is Insights and Straight Talk. I'm Rodd Duff, joined as always by producer Barbie. Today's conversation is for anyone who has ever looked at the stock market and thought, that world is just not built for me. Because for decades, investing has been framed as something reserved for, say, insiders, for elites, for people with the right pedigree, right? The right vocabulary, or know the right gatekeepers, or is Nancy Pelosi. And if you did not grow up speaking that language, the message was subtle but clear. Stay out. You will mess it up. Here's the problem with that narrative, though, it's just wrong. It is expensive, and it has cost the great middle class confidence, opportunity, and agency. Today, we're going to challenge that thinking with data, discipline, and just enough disruption to wake people up. We're joined by Jaden Sterling, founder and CEO of Sterling Stock Picker. This is an award-winning investing platform built to flip the traditional finance model on its head. And Jaden's message is, honestly, it's refreshingly direct. You don't need a Wall Street pedigree to invest with confidence anymore. Sterling Stock Picker analyzes over 60,000 companies, uses AI-powered insights and real-time performance tracking. You know how we love AI and automation here. And also Northstar ratings, and is outperforming sector averages by 67%. Let that settle. Because what that tells us is not just that technology has advanced, it tells us that access has finally started to catch up with ability. But Jaden's story didn't start on Wall Street. It started with a 14-year-old kid sitting in an audience, listening to somebody talk about money and realizing that most people were never being taught this clearly. That moment for Jaden became a calling. And instead of selling fear, hype, or complexity, he built something grounded in clarity. This episode is not about hot tips. It's not about timing the market, and it's definitely not about pretending risk does not exist. It's about understanding why traditional investing advice keeps everyday people confused, why complexity has been profitable for institutions, and why education, not prediction, is the real advantage. We're going to talk about how AI tools are leveling the playing field that Wall Street, what about it gets wrong? It gets wrong about risk. It gets wrong about transparency, and how regular people, us, can think like insiders without gambling or living glued to a screen. We're also going to talk about values-based investing, because you know what? Money doesn't live in a vacuum. No, it shows up in how families plan, and how stress enters the household, how confident people feel about their future. And this conversation matters right now. Why? Well, rising costs, economic uncertainty, personally, retirements that feel closer than planned, a system that has not always felt designed for the people who are actually help keeping it running. Think about it. If you have ever thought, Rodd, I'm too late. I don't understand this right here. The system feels rigged. I don't have time to become a finance expert. You know what? You're not behind, okay? You were underserved. And that is why conversations like this exist. Let me just pause here for just a moment, okay? Insights and Straight Talk, as you know, is independent media. No corporate, we have no corporate overlords, no scripts being handed down from sponsors, no financial institution telling us what we can and cannot ask. This show is supported by community partners and sponsors who believe in education, transparency, and long-term thinking. Partners who understand that clarity builds stronger families, stronger communities, and a more confident middle class. If you value conversations like this, here's our only ask. Subscribe to our YouTube channel on Rodd Duff 1939. Join us on Substack, insidestraighttalk.substack.com. Those actions, that support does not just keep the lights on. It keeps conversations like this free, accessible, and honest. And for our audience, you know this. You guys are not a passive show. We are not a passive show. We often have hundreds and sometimes thousands of viewers engaging in real time. So ask questions, challenge assumptions. And I love it when you guys add perspective. This is not accidental. That's the point. Because financial confidence is not built in isolation. It is built through understanding, repetition, and community. Today, we're going to explore what it really means to move from fear and pretending that risk doesn't just disappear, built by learning how to evaluate that risk. We will talk about why beginners often think about risk backwards, why watching the market every day is not a strategy, and why long-term wealth for the middle class looks less dramatic and a lot more disciplined than social media would have you believe. This is not about getting rich quick. It's about getting steady, informed, and in control. Because when people understand how their money works, something really interesting happens. They show up differently at work. Think about it. They plan differently at home. And you know what? They engage differently in their communities. Financial confidence is not greed. It is stability. So settle in. Bring those questions, okay? Challenge what you think you know. Jaden, welcome to Insights and Straight Talk. How you doing, brother?
I'm doing great, Rodd. Thanks so much. What an incredible introduction. I really liked how you framed this conversation today. And you and I, the more I listen to you, I'm like, we are so on the same page. It's wonderful.
Love it. Love it.
Yep,
I've been looking forward to this show for exactly those all reasons. I meant that you just described.
Awesome.
Turn this down so I don't have a, all right. So I have less light. I am always battling with light in this
Me too.
damn studio.
Me too.
And it's, I did learn something yesterday, and maybe I'll send you the link. One of the guys yesterday on the show, we do shows 6 days a week. And so yesterday's show, we're afterwards, we usually talk in the green room. Hey, that was a great show, or whatever. And this dude had this light. He's a professional podcaster. He has this light, and you see, I'm getting shadows when I do that, so I'm trying not to. But he has this light, and he's going to send me a link to it. It lit up his face beautifully, and everything else was dark. It's just a really cool little thing. So
awesome.
if I get it, I'll send you one too.
I appreciate that. Thank you.
So I've been dying to hear this story, and dying to get into this information, and dying to learn how to slowly get control over my own financial wealth and build. But I really want to hear the story about this 14-year-old kid. I always ask people, where did your journey begin? Some people take it back to birth. I have a real strong feeling you're going to start somewhere around 14 years old on that question.
Yeah, your intuition is absolutely right. So what happened was I was 14, and I was actually in my mother's townhome, and I came down the stairs, and there was this, remember back in the day, Rodd, the big boom boxes?
Oh yeah.
Big boom box on her dining room table with with a cassette. Remember some of your listeners might not even know what cassettes are, but a cassette playing. And it was Wayne Dyer speaking. And
okay.
Right, powerhouse. And right then I had an epiphany. Have you ever had an epiphany, Rodd?
I have.
Okay, so you probably know in that time, for me, it was like time stood still, and I just felt three things on the inside. It's not like I heard it from the outside, but I just felt it very deeply on the inside. You know the saying, when you feel it in your bones, right? So correct. I felt three things. The first thing I felt was, or I was told, however it was communicated to me, was I would be speaking on stages around the world. The second thing that was communicated to me was that I would be teaching people how to be empowered by money, not enslaved by it. And the third thing I was told, that I would be teaching from personal experience, not from a book I read or a course that I took. So right there, my whole life purpose was downloaded to me. And it was so significant. I mean, I can still remember being that 14-year-old standing in front of that and that communication given to me.
Wow.
It was so powerful. And I followed it. I followed it to a T. It's why I went to school at American University, studied finance, why I worked on Wall Street during the 90s. And then after that, I'd created enough wealth from what I learned from my clients, not from the brokerage firm. We'll get into that today, I'm sure. And I retired at 31. And from there, I've been living my purpose 100% on point of assisting people around the world. Speaking on stages like yours here in this podcast today is fantastic, and communicating the message that I have to share.
Yeah, we have 200 people on already. That's kind of quick. We're
nice.
Jumping right in here. Very, very nice. And so that moment instilled in you a pause, and then followed by an epiphany. Yay?
That epiphany instilled
or at that
in
moment.
me like the cause of, okay, wow, this is how I'm going to live my life. This is it. That was the roadmap given to me so clearly. Like, they told me how I'm going to do it by on stage, the message I'm going to share. And so from that, empowering people with money the exact words, as opposed to being enslaved by it. That is such, Rodd, look, I'm so excited about this show, because I think the message I have today is going to resonate with a lot of people. I remember I was just sharing with a friend yesterday. I was telling her, when I went to enroll in my freshman college classes at American University, I went, it was in the auditorium, and I go from, table to table. And this is old time, right? Old school, and pick my classes. And the very last table was the MasterCard table. And it was like, here, you get a $500 credit card. And I'm like, what? I didn't have a job. I'm a student. What the heck is this? Well, I'm competitive, man. I'm type A. I'm like, I ran that thing up as fast as I could. No one told me there was like a 25% interest rate attached to it and that I had to
Oh
pay
yeah.
it back. And that was my first lesson with money was debt. You know what I'm saying?
Yeah,
There's
100%.
there's a
And
reason
just
for
that,
all that.
and just to add to that, sorry about that. Poop, poop. But you started that comment off with, I think that my message today, our conversation today, is going to resonate with a lot of people, and 100 inside my whole body went, yeah, because that's what the show's about. I mean, the
Yeah.
great middle class, how we empower them. Different guests, not guests, experts come on like yourself,
Mhm.
and give us things that we wouldn't normally have access to. Like we don't know that you can make investing. I'm using myself as in this example, but I guarantee it spreads out. I always thought these things, as far as investing. Sure, there was a 401k at work, and they threw money in it, and it grows and all that stuff. But I'm not an investor, so to speak. And I'm really curious about how beginners think about the risk. They think about it backwards. There's some interesting things that that we as a community don't necessarily get to hear, except for coming here and listening to folks like you. So yeah, 100%. Your message is critical, because part of empowering the middle class is bringing I mean, we're all struggling, man. Paycheck to paycheck is not an unknown term, right?
Yeah. Exactly. And it doesn't have to be that way.
Right. Right.
So
So
how the
so go
system,
ahead.
let's talk about how the system's set up, because
Yeah.
most people know this. It's set up, we're in a debt-based economy. And just look at the US debt, what are we up to? $38 trillion. And one of the most mismanaged budgets in the world in the history of economics is the US government. And yet we are expected to learn how to manage our own funds when we're not taught in school. I have so many teachers in my world who say to me, I want to teach what you're sharing, but I can't. My hands are tied. And I believe them, because they're doing things very differently than what they're teaching in school. So in school, I mean, heck, very limited financial education. What I learned in high school was I did learn how to write a check. They showed, this is how you do it. Of course, they're probably not teaching that nowadays.
They
But they
aren't.
never told me I had to have a bunch of money in an account to cover those checks. So we only get half the story, and the other half of the story we get is not true. We are told many mistruths about money. Think about it. When you're a kid, your parents probably said, go to school, get a good job, and put sock money away for retirement, and life will be just great. Well, we know now that officially is a lie. Like you said, there are many people who don't even have a paycheck to look forward to.
True.
So when you're in a situation where you're relying on a system or other people to make you financially solvent, that's error number one. We are in a system now, because of the creator economy, where you can actually write your own paycheck. There's so much opportunity out there with whatever skill set you have. And if you look at, monetizing that, I mean, you've got platforms like YouTube, you've got, everyone knows the social media platforms that when you
Let
put,
me jump in real quick. Two things you said. First of all, I'm going to use what you just said to announce that we are streaming live to Facebook, to LinkedIn, to YouTube, to X, and to Instagram, all at the same time. I like to say that every once in a while, just so you know where it's going out. And you give me the perfect plug to do so. Also, in that education system, I don't know if you've heard about our regeneration school project, but we're adding a fifth core. That's why we're here in Mangum. It's a very small town, so manageable pilot program that can scale nationally. And that program teaches exactly what you just said. It teaches you life, mental health, money, and then we work with the eLeaf Lab program, which is in school is agile learning and project learning. So some cool stuff you said there, and I just wanted to jump in and take an opportunity to talk about that as the questions are actually starting to come in already.
And congrats on that, by the way. God bless you for doing that work, because it's needed now more than ever.
It's very much needed. Yeah. Very much. The school system's broken. I mean, just to add to what you said, the school systems, but it's crazy because AI, what we're partially talking about today, are those tools in your your investing platform.
Yes, they are.
Which I really want to hear about. And there was another one that I looked up that anyway, we'll get into that in a minute. But the school system, all industry has evolved to keep up with people evolving, right? Phones, cars, horses, but all this stuff has evolved through time. And in 50 years, our educational system hasn't changed a lick.
That's right.
I mean, basically a lick, except it's gotten worse in some things. Kindergartners getting read to by, some weird stuff.
Yeah.
But other than that, it hasn't. And I'm not attacking a community, but that's still weird. That aspect in school is weird, and there should be no blowback on that. But the school system, other than that, hasn't made a single freaking change in 50 years. And we need a fifth core project basically called life.
Yeah.
Right?
Yeah, exactly.
So go on with what you were saying, because you're teaching people the things that, maybe we should all team up here, and get some of that education going in. The fifth core could literally start in kindergartner. They don't do math. They do 1 + 1, right? And so you can build it up somewhere along the line, maybe in high school. Okay, now kids, freshman year high school. Now we're going to start talking about using AI and picking stocks and being manager and manage discipline. Risk, manage risk, right?
Yeah, you're absolutely right. And risk is something that is key to any financial growth. Absolutely key. But think about how, society is about risk. Like, oh no, don't take any risk. God forbid you take risk. It's like people are so brainwashed into thinking that risk is a bad thing, when everything is a risk. Asking a girl out is a risk, like crossing the street is a risk. Everything that you do on a daily basis, there's some level of risk involved. Now, you can manage that risk by certain, like you said, disciplinary actions with investing. But I think, as I mentioned, I worked on Wall Street during the 90s, the entire decade of the 90s. And I noticed as my wealthy clients came in, multimillionaires, and this was when $1 million was a lot of money back then. It was meaningful, yes. Substantial. Yeah. And I noticed in their portfolios, there was just a handful of stocks, like 4 or 5 companies, John Deere, IBM, some of the big names back then. And they grew their wealth through individual stocks. Now, when those accounts came into the brokerage firm, we were told to sell those positions because of diversification. Like, oh no, you got to diversify their portfolios. And I'm a young kid. I'm 21, 22 years old, and I'll do it. And so we sold their amazing companies out and we bought them packaged products, mutual funds, unit investment trusts, managed money, T-bills. I mean, just a bunch of stuff that made money for Merrill Lynch, not for the client.
Yep.
And there's a term, it's called velocity. Brokerage firms track how much money they make off of you, not for you. So when you start to understand the system, like what really is ruling people's thought process, I mean, the brokerage firms come out and say, don't expect to get anything better than average. Well, what is that about? That's like telling your 10-year-old, hey, don't expect to be anything better than average in life. You would never do that, right? It's just insane.
Crazy.
But the indoctrination starts early with people. It starts with getting a job and, hey, well, you got to get in this 401k program. And what investments are in the 401k? Mutual funds. Mutual funds. And so they get people accustomed to that way of investing. Oh, don't worry, you're diversified. Like mutual funds have sometimes 150 to 200 different stocks in them.
It just waters it down, doesn't it? Doesn't it
Waters
just
it down,
water everything down? Right?
Waters it down like you wouldn't believe. And by prospectus, they have less than 1% in cash. So when someone wants their cash back, they have to sell stocks. Now, when do most people panic and want their money? When the market's down. Yeah. So in and of themselves, they are just an investment that is set to underperform everything. Whereas, when I looked at the clients with their individual stocks and I decided I'm never buying it. I just made a decision right then and there. I'm never buying a mutual fund in my life. I have never bought a mutual fund other than a money market, right? Because money markets give higher rates than cash accounts. I've never bought a mutual fund. So I'm a stock picker. I'm a stock guy because I learned early on stocks are the way for financial independence. And during the decade of the 90s, I invested in one company, put $70,000 in. It happened to be our parent company. And the stock tripled. My 70,000 grew to almost $1 million. It was like 950,000, just under $1 million. And that gave me the financial freedom to get out of Wall Street, right? To leave the brokerage firm. And that's when I started to know, okay, there's another way to go about building wealth, about investing. And I just continued on with working with these formulas. And then I parlayed that into starting an investment company where we specialized in affordable housing. So I shifted an asset class. I actually used my stocks as collateral to buy apartment buildings and mixed use properties, commercial properties, single family homes, and grew that to over $12.5 million in the early 2000s. So I feel like I had to get that level of financial acumen in order to really share with people how to build real wealth. And I see the question there. We'll get to that in a moment. But that's why I said to you early on is you have to lean into taking some level of risk in life. You have to get comfortable with it. Whatever anyone can do to start embracing risk as opposed to being afraid of it or pushing it away, really, really important.
Yeah, and we talk about that in essence on the show quite a bit, in that life is not a straight line, nor should it be, right? It's a journey, right? It's a path, and people like you are just putting light on certain areas in the path so you don't fall off, or you can get back on the path if you do. And risk. I like the way you're framing that and you're putting that, because it's so true. Everything we do in life is risk. I mean, from the time we even getting out of bed, you could trip and fall, and I mean, just all sorts of things. But then if you have some knowledge behind whatever you're doing, even if that risk happens, you have a way to manage it, right?
Yes. Yes, you have to manage it. And there are things like calculated risks. I'm not saying blindly go into something without
No.
an
Yeah.
understanding of it. And then there's tools that you rely on, like ours is perfect for people interested in investing in stocks. We've done all the homework. We've created this over an 8-year period where our algorithms process everything from the technical indicators to fundamental indicators to financials. We look at the financial health of a company. So we do all that. You don't have to. You don't have to know how to be an expert in investing in order to find winning stocks. And that's our motto. We feel very strongly about that. I will
Apparently neither
address.
does Nancy Pelosi either. She had to throw that in sometime during the show. I had to.
Her level of investing is what is that called? Oh, insider information. That's right.
Insider information. But you don't have insider information, and you're still. What did I read somewhere? 26% above sector averages. I mean, you're a real deal.
67% above averages.
Oh
Yeah. And that number
wow.
fluctuates, but we are transparent. Yeah, we're transparent. It's totally on our website. It's on the front facing page. You don't have to go into our software to find that number. So how have we accomplished that? Through our processing, through the number crunching, through the data processing. We look at the social media pages, postings of companies. We are constantly evaluating on a 24/7 basis 60,000 stocks in our software. And there are many that we don't even show our investors because they're not worth your investment dollars. We actually do the selection process. Of companies that are thinly traded or, the numbers don't make sense. They don't have the financials to back the price.
Let me just interject right there because I was talking to somebody the other day. Out of the stock market, how many companies are there? Do you know the company numbers? Do you know those numbers off the top of your head at all, or no?
Well, when you say stock market, you've got many indexes within.
Numbers.
Yeah, like you've got the NASDAQ, you've got the Dow Jones, you've got the S&P 500. So all these different indexes, comprise of the equity market.
How many companies make that up?
Probably 45,000. Probably
something like that. 45,000.
Like
yeah, that's what I heard. And then I heard that only about maybe this number isn't right either, but it's a dramatically lower number. Only about 2,000 companies actually create the money, the wealth within the stock market. That's pretty true, isn't it?
Well, it depends on the indexes you're talking about. Like the NASDAQ has 3,400 companies that trade on that index. So I would say 3,400 stocks would it contribute to the wealth of that index.
Okay, so that I was just going off of what you just said that there are thinly traded companies and you don't tell some. So that made me remember that stat. So this maybe it's across all of them, and some of them have larger numbers that aren't really like they're on the market, but they're just not used like what you were saying.
Correct. They're not contributing
great
to
companies.
Yeah.
All right. So I thought that was an interesting statistic. And what you're doing is you've got these companies in your program allows your customers to go through and go through the investment process, or is it an automatic done thing? I know what AI does, and then there's automation, which they're separate things. So how does that, let's start to dig into it a little bit. And I like what Rodd has to say here. So the AI isn't actually picking the stocks, or there's some of that, but it's also more importantly analyzing the data that in the old days there were teams of people that did, and why people like me could never really get a handhold. because I wasn't an insider, so to speak, right?
Yeah, I mean, to your point, when we developed the software, AI wasn't it wasn't like it is
Clicking.
today. It was, we were just it was like hand-to-hand combat. Well, let's identify the top metrics that are going to really move the price of the stock. What are those? And that took me a year to really pinpoint and figure out. And then it was, all right, well, let's add metrics to each one of those top things that will evaluate the level at which a company can grow, the stock price.
Click it.
So we did this all through, every night and every weekend working, developing that. Now AI has been just cherry on top. That's how we look at it. Like, it's been one of those things that has been significant to guide our clients through their investing process. But where we come in, I think the best part of our software is our portfolio enhancement piece, where someone says, okay, I've got, $100,000 to invest. What do I do? And it will walk them through their risk level. So we have like a 13 questionnaire, quick assessment of someone's level of risk. And then secondly, we have them walk through their personal values. So they get to choose, like 3 to 5 personal values out of 33, because we believe, it's really important to invest in companies that are aligned with your personal values. It's like, if you tell us health and well-being is a top priority, you'll never see companies like McDonald's or Coca-Cola in there. We just won't show it to you because we know health and well-being is a big part, right? So you understand that. And then it helps someone build through our process of, they first walks them through, okay, it's important to build a base for your portfolio. Those are lower risk companies that pay dividends, and we recommend 5 to 7 stocks in the base of your portfolio. And then we just go up from there. You got your base, you got the midsection, which is the growth, and then you have your accelerate. So we believe that a well-rounded portfolio is comprised of individual companies that start right at the base. Someone says, I don't know where to start. Okay, don't worry. We'll guide you through the entire process, starting with dividend paying stocks, low risk companies. And these are the biggest companies in the world, companies that are really out there crushing it, diversified business models, doing business all over the world. And so it helps limit or reduce the fluctuation or risk or volatility in a portfolio. So how does, to answer Rott's question, how does AI actually help reduce risk for everyday investors? AI to me is, if you've ever gone bowling and you have the little bumpers down the bowling alley so you don't go into the gutters, that's what it does for our software. It gives our investors these little bumpers, these little rails to keep you on track, so that you don't make or misstep with your investing. That's what and we've called it Finley. That's our financial AI guy, 24/7 investment coach. And Finley is only as good as the information we've given him. So we've tuned him into.
I want to hear about that. I was reading about that Finley. It really looks. It's an agent. I mean,
it's
you're
awesome.
Referring to him as we do now in AI.
Yep.
Agents are trained. You put a lot of just like a group of people. In this case, or a single person, an assistant. So talk more about Finley. I like this. I like this Finley thing.
Yeah. So Finley is an amazing tool that is comprehensive to financial planning. So if you were to go into, our software and say, hey, Finley, my an example is my mortgage is coming due. What do you recommend in terms of lenders or what type of mortgage to get? Like, it will guide you through that process expertly, really, really well. But it will also know within our platform, it knows what stocks are in your portfolio and what stocks are in your on your watch list. And it will take that information and make recommendations based on what you already have. So it'll say,
okay,
oh,
so Finley is now my, okay, you and I joined the team, or I joined your program. Finley is now, I have access to that agent. Finley's now my agent in essence. And so we're feeding in the risk analysis, the 13 questions. We're feeding in some things that are about me. And in that, now I start investing in making investments.
Yes.
In stocks, base, and all the way up to the accelerator, 3 different areas, all stock. And then I say, hey, I want to invest in something else. Excuse me. I tell Finley that, and Finley says, okay, well, this one matches up well. This one matches up well, and these are the risk reward kind of situations, and then it pulls that in according to the rules preset by what you guys have trained it to do. Yay?
Yay. And I'll add an and to it. So Finley knows what's in your portfolio and what's on your watch list. And if you say, Finley, show me complementary stocks to what I already own, it will evaluate the portfolio based on performance. So it'll look at your top performing stocks. It'll say, you know what, you've got some great semiconductor companies. Here's another one to consider that would complement your portfolio. Okay. So, I mean, it's deep, it's effective. It's going to really help you take your investing to an entirely different level, for sure. So perfect setup for Fazrod here. Yeah, interesting name. But the exact setup here. So what makes Sterling Picker stock picker different from? Oh no, I hit the wrong one. I'm sorry, I hit the wrong. Can begin before that one. Sorry, can beginners really use these tools without prior investing knowledge? And that's what you were just talking about, where you can just talk to Finley and Finley will, right? I mean, am I capturing that right? You know, our tagline is, you don't have to be an expert to invest like one. Correct. And that is the number one thing people say about our software is, I'm amazed how I can find companies that are performing really well, because let's face it, that's what we're looking for when we invest. We want returns, right? We want to get our money working as hard for us as we do for it. So my biggest thing, and just last month, early December, I had a friend email me. I've known her for a long time. And she emails me and said, hey, I just want you to know, I finally took the risk, put $5,000. She bought 4 stocks based on the software. It was like AMD, Palantir. I can't remember the other 2, but these company, and I was just blown away. She said, I've already received a 30% return on my money. And she said, I'm at the point where I'm going to tell my husband what I just did. So, you know, wow, like that, right? 30% return. Imagine, because we are told, you know, hey, just settle for average 8 to 10% a year. When I keep going back to, you don't have to. It's like 10-ish. It's like 10-ish to 12-ish, 8-ish. Consistently in the stock market is what. And you're talking. Well, she hit 30%, and more beyond that. You guys are hitting. She started so I had no idea any of this was going on. What should you start with? Is there any number that is too low to start with that doesn't make, like, there's commercials on the show right now or on social media that say, my dad was 50 years old when he started, and there's somebody advertising something. Start with $20. I mean, that seems a little unrealistic, but if somebody doesn't have, if somebody's coming out and really needing to build this and they don't have a lot of money, I mean, they're living paycheck to paycheck.
what's realistic to come to you, me to come to you and say, okay, I'm going to do this. Let's do this thing. I've got X amount. What's a number? I mean, 100,000. Yeah, I get it. 50,000. Yeah, I get it. But
sure.
what's
I think
the number?
there's two things to look at ahead of the number. And that is, number one, being consistent with your contributions to your portfolio. And it's called dollar cost averaging, right?
Putting money in, you mean?
Yeah.
Every month, every week, whatever it is.
As often as you can. It's called dollar cost averaging, so that you're averaging out the price of, so that's the first thing. The second thing is to really understand what your target goal is. So, and I say that because money in and of itself is not a good enough goal to keep you on track. It's just not, like, because I've hit every one of them. I've hit, where I thought $100,000 a year in income was a great thing. I thought that was going to change my life for the better. It didn't. I thought, being a decamillionaire, a net worth of $10 million is just going to have me live this most incredible life. It didn't. And what I realized was that money is the tool, but the key is you have to have purpose and vision ahead of the money. So that's why I say it's really important to know, what you're reaching for. Make sure there's something at the end of that money rainbow, right? There's just not a treasure chest. Maybe it's a home for your family. Maybe it's a rental property. Maybe it's having enough cash flow to take care of your elderly parents. There's got to be some type of emotional attachment. It has to be more than that pot of gold, because it's not enough. Does that make sense?
Oh my God, yes. And more than that. I talk to a lot of experts on this show. You are our 451st show.
Nice.
In a year and a half. So I do them all the time.
Mm-hmm.
But a lot of those are financial, and within that is what we're talking about today: investing, different types of investing. You're the first person, and I also have a lot of friends that, like I said, Producer Barbie does. Some of my old friends, are involved in investing quite heavily. Mm-hmm. But anyway, my point is, you're the first person I've ever heard. Maybe not the first person, but that I've ever heard for sure, the first person that ever talks about the soft, not just money. Money, people talk about money, but you're talking about tying emotion into it. Why do you? And I have a feeling I know why, but let's pull that out a little bit before we get into your Sterling stock picker, because I want to hear about how that works. But why do you put an emotional tie? Wow, we're almost at an hour already. This is going by really fast. Why do you put that in there? I have a feeling I know why, but I want to hear that. I don't usually hear that from financial people, and that's interesting. I like that different approach.
Well, I can speak on it because I've accomplished all the milestones that people say will make you happy with money. Like I've created at 100,000. I was 24 years old when my income level hit $100,000 a year. And I was like, oh, well, obviously if that's not enough, I'm going to go for 200,000. Well, the next year I hit 200,000. At 27, I hit 300,000 a year. At 29, I hit 450,000 for the year. And I realized it's not about the money. That's the main thing. And then after that, parlayed it into hitting significant financial goals with our real estate. And that's why I say, the reason I talk about this, there has to be meaning and value associated with your wealth. There has to be. Because if there isn't, then it's hollow and shallow, and it won't keep you in the game. So if you have a goal that is associated, that is so meaningful for you, where you're like, there's nothing that's going to stop me from achieving this, right? There's nothing that's going to stop me from buying a home for my parents or paying their mortgage off or paying my mortgage off. Like whatever it is, whatever your goal is, you gotta attach it to something that's meaningful and valuable to you.
Yeah, I get that, man. It pulls you through times that you maybe get lazy or bored or made a mistake, but now you keep going because you're tied to that. So let's get into a little bit of the nuts and bolts, let's call it, with Faz here. Sorry, Faz. I threw you back off after I realized I made the wrong move there. But great question here. Great question, because I want to know too. That's not what makes it a great question, but on top of that, I want to know too that what's different about traditional stock screeners.
Yeah, and I'm happy to get there, but I just want to put a bow on what I had said earlier about the meaning and value, because there's one more step to it, and that is, so what I'm trying to convey is it's not enough to just have $1 million sitting in your checking account, right? Put that money to work in another form or fashion. Like right now, I'm basically scalping off profits in my stock trading to buy real estate. That's I'm not about, oh, I need, X amount of dollars in my portfolio to make me feel good. I don't do that. It just doesn't matter to me anymore. What matters is, what can that money do for me today? Like, how can it provide something not only meaningful today, but also down the road? Like, how will it make my life easier? Well, paying cash for rental properties makes life a lot easier, doesn't it? Because you're not encumbered with mortgages. And so that's what I'm saying. I just wanted to just circle back to that, to take the next level of invest that money that you're creating in the equity markets as you grow your wealth, get it to do something else. So
that's the kind of diversification you want, not the big mutual fund diversification.
That is the kind you want. You want multiple streams of income. Maybe you take some of your profit, go buy a car wash. Like, those things print money, literally.
They do.
There's so many investments out there, so many opportunities. You just have to turn your focus to the opportunity. Okay, what makes this different from traditional stocks?
Before you do that, okay. You're opening up more ideas here. Okay. So is that part of your program too? Because I did not know this. Are you like interactive? Like,
yes.
Okay,
yes.
So
I'm in there every Monday.
Give you a plug here a little bit. Yeah. Give you a plug here a little bit about your company. By the way, before we end, which we're nowhere near doing that yet, but before we end, please put your contact information in the private chat. When I see it's read at some point along the way, I'll copy and paste it towards the end of the show, so it's at the bottom, more or less, of the comments.
That sounds great.
But please,
every week, Monday, I live stream through our platform for our subscribers.
Okay.
And that's where I'm sharing information like this, sharing what I'm seeing, what I share.
Are we communicating like this, or is it like other ones where you're sharing details and maybe I'm questioning
webinar? Yeah, webinar format. If I get questions come in, I'll certainly answer them. But it's what I share. I'm very open about the stocks I buy for my own portfolio. I share why I'm looking at certain sectors and indices, and the reason I'm taking a position in a stock or selling a stock. Like, I feel like, because this is my gift to the world, this is my work that I'm here to do, I need to be as open and transparent as I can be. And I, like you, don't take any type of financial incentives from companies to push stocks. We've never done that. We never will do that. Like, we are pure.
That's a real thing too.
Yeah.
That's a real thing.
It's everywhere. So what sets us apart? That one thing sets us apart from traditional stock screeners. We're not incentivized. I've never said yes to any of that. I never will. I don't have any interest in that. But secondly, I think the thing that sets us apart is this value-based investing, investing based on your personal values, aligning your money with companies that are in alignment with you.
Yeah,
Um,
I love
it
that.
took me almost 6 months to connect every single publicly traded company with a personal value, our list of 33 personal values. It took me literally 6 months, like literally going, okay, this company is aligned with that value, this company with that value. Like it was a huge undertaking. Probably AI would do it in a second now, but we didn't have that available to us back then. But I think we're the only value-based platform in the world. I don't
Yeah.
know of any other. Yeah.
It's the timing is maybe ironic in a way, or maybe because of the current, but a lot of companies they're becoming more than just suppliers to us in people's eyes. They're getting active in politics to a certain degree, and what their stance is, what their value proposition is. There's a lot more of that, whether it's real transparency or whatever. But um, value-driven stocks picking
Mhm.
is something that you're obviously getting a great response from it. You have to be, because it's kind of a thing now. People, anything that they do, more and more and more, people are not just kind of, okay, I need a loaf of bread. Well, I need a loaf of bread that doesn't kill plant worms, or I don't
Yeah.
know, whatever. There's a lot more of that happening on every day. In society is kind of evolving that way. Did you go that direction because of the times, or you said, you know what, value in somebody's life is important, and that adds to that emotional, right? I mean, now
Yeah.
you're really tying people into that aspect of their life. They don't have to sit there and stare at screens, but they have to set something up and train that AI about them,
Yeah.
about who I am and what's important to me. And it just adds that much more. I'm getting a picture here. I'm getting it, man. I'm glad we're
Nice.
having this conversation,
Me
because
too.
it's not, like you said multiple times, it's not just about money. It's about a whole, it's a whole package. It's the human experience now. Yes, I'm going to gain some wealth from this, but I'm also going to do this thing that I like, and that thing that I like. And oh, by the way, I'm going to pull off some of these profits, and I'm going to invest in something else that I want to invest in.
That's right.
That's a human experience that's worth having.
That's it. It creates the blueprint. People think they
Get it?
need to know how to analyze a stock. They don't. They just have to know what their blueprint looks like.
Yeah,
That's it.
that
Spend the time. Right?
that's a beautiful platform. Beautiful platform.
Thank you.
Let's do a little bit more technical here, and
Sure.
we'll jump back and forth here. I like this question, Ali Moore. She actually pops in here quite a bit
Nice.
on our shows, these kind of shows. So I think she kind of has she's into it. Sorry, Ali, I don't know how to end that. How often does AI update its market analysis in real time?
Yeah, it's
That's got to be faster than the brain, obviously. It's a great question. Exactly.
great question. And it's in real time. It's, if you pose a question to it and then it'll say, can I help anything else you want to know? And you ask another question, it's going to keep compounding your answer to you in real time. She's absolutely right.
Let me ask you this, just to flip it, because I use AI quite a bit. I have to. I'm the only one who does these shows. I mean, Producer Barbie is a marketing thing. She's an ex of mine. We've been together for 20 some odd years, but
Nice.
We're better friends than we were together. But
yeah.
So anyway, I use AI a lot, but I was talking to my son about this, and he framed this well. Sometimes it just goes berserk. If you're not telling it the right stuff, you can go down a rabbit hole. How easy is it to say I know a little enough about this to be dangerous. You know what I'm getting at? Can you go down that hole, and can you pull it back out? Because then now you're talking about money. I just have to correct an email I'm writing. So,
Yeah.
hey, start over or something. How does that work? Or does that happen? Is it more
Oh,
sophisticated? And,
it's
what's that?
absolutely. It's happened early on with our use of AI.
Sure.
A few years ago, it was a disaster. Like it would say things, first of all, at times it wouldn't even answer you or say things that were like so bizarre.
Yeah.
And thankfully, my team is absolutely incredible. They're on it. They're on top of this whole thing. And we are constantly reining in our AI and teaching it and giving it more information. So just to give some structure around our AI, I've been teaching for the last 12 years financial courses, and everything from money mindset to reducing debt to investing in stocks, investing in options, building wealth, portfolios. So I have hundreds and hundreds of hours of courses that I've taught. And we put all that content on a platform that's called Prosper. And on that platform, we gave our AI, Finley, who is also available through Prosper, the outline of all of those courses. So we just had it transcribed, every single course, and then we uploaded all that to Finley. So Finley will, Finley's great on it. Will never mention to buy a mutual fund. It's always going to help people stay focused on buying individual stocks, is one thing. And that's been the biggest game changer for us. Once we did that totally up-leveled Finley, and has given us a real leg up in that space.
So if I'm looking at this, you guys have really, your team has paired this in, and Finley is dynamic and on top of it, and so on and so forth. But what if I, as a user, input something that kicks it off or doesn't go the direction that I was looking for? Can you get it back? I know what I'm asking, but I don't know what I'm asking. Can you read what I'm asking?
Yeah, I can. It's just changing up the question. Quality of questions is key, like any AI input.
Exactly.
Yeah.
Exactly.
So you just reword it or rephrase your question. Yeah. It's that simple.
And it reacts pretty simply and gets you back on course, so to speak.
100%. Yeah.
All right. So what's the biggest mistake Main Street investors make today?
The biggest mistake is following Main Street. Like,
Oh, okay. Go on. Yeah. Go. Yeah.
Yeah. Let's talk. What is Main Street doing? Main Street is out there buying properties with mortgages. They're out there buying only stocks through mutual funds. They're out there piling money in investments that are not giving the returns that you can actually expect to get. My biggest hurdle with folks is getting through to their psyche that they should expect 30% return from their individual stocks. Minimum.
Yeah.
Like minimum. That's my biggest challenge, believe it or not, is that thing. And people are like, what do you mean 30%? I'm like, well, yeah, that is available to you every single day. It's available to you every week. Like, so here's the thing. Your brain will focus on the information that you tell it to focus on. Here's an example. If you've ever decided, let's say you wanted to buy a white Toyota Tacoma. Have you noticed how many of those white Toyota Tacomas that you then see after you made the decision to buy that car, right? They're everywhere, right? They're next to you. They're in front of you,
100%.
behind you, in the parking lot across the street. And guess what? They've always been there, but you never had that focus before. So with investing, all you have to do is ask your brain, this is physiological now, to show you winning investment opportunities. Show me, first introduce this concept to your psyche, to your physical body, to your emotional, spiritual bodies, and say, I'm ready for my money to work as hard for me as I do for it. show me investments where I can receive at least a 30% return. And then when you start to get comfortable with that, when you start to follow through, buy those companies, you get 30%, then you're going to go, oh, this really works. Okay, show me investments where I can double my money. Then we start, it's a known fact the first $100,000 is the most challenging to get. Once you build up your asset base to 100,000, it's easy after that because you've created the discipline. So number one, first thing is you're not overspending. That's the biggest problem with most people. I don't care how much money someone makes, they are probably overspending because they don't know any differently. And I've had millionaire clients overspend.
You mean overspending? You mean day in and day out, not
day in and day out,
just
living off
Gotcha.
credit cards, spending money they don't have, buying cars.
That's most people, isn't it?
Most people, man, that's most people. So that's Main Street right there.
Yeah.
So you have to become a little,
good point.
right? A little like, I don't know, offbeat. What's the Main Street offbeat? I don't know, something, but get off the main street.
Hey, I like that.
Yeah. And get to a place where you're doing things differently than most people. And start telling people this, like your vision, here's the thing with money. Money is forgiving. Money is forgiving. If you've been someone who has squandered it or wasted or made bad decisions, doesn't matter. Money could care less. Money's like present energy today. So when you show up and you're like, okay, I'm ready to start working, creating a relationship with money. Maybe you give money a name. How about that? Build a friendship with money. How do you, we call our friends by their name. So start naming money, start creating a different relationship with it, because this is all tied in. Nikola Tesla said it best. Everything is about energy and frequency. And money
was a brilliant man. That dude was a brilliant man.
Yes, he was. And when you follow brilliant people, you pick up a few things and they think differently. This is not Main Street thinking. Some people are going to hear this and go, this guy's off his rocker. It's okay. Think of me what you want. It doesn't matter. It's not going to affect my life in any way. But what if you were open to thinking differently? What if you started to say, hey, this guy actually has made it in life. Like, he's created a massive amount of wealth. He's created opportunities for people through this stock. Maybe he knows a thing or two. And what can I learn from that? Right? Like, what can I get from his high level expertise? And I'm going to share with you right now. It's about the relationship that you have to money. And the relationship mirrors your inner self. It's a mirror. Money is a mirror. It's gonna highlight what's working really well in your life, and it's also gonna highlight what isn't. So for me, I noticed in my life, because I'm like a first-class noticer, man. I want to notice everything because I want to improve a little bit every day. If I can be better today than I was yesterday, but not as good as tomorrow, I'm there, right? I'm totally focused on that. So I noticed I get in my own way. Rockets, newsflash. Am I the only one? I don't think so. Yeah. But I see how I do it to myself. I get in my own way. And so then it's a matter of, okay, I got to figure out, how do I get out of my way and make life the most fun, the best I can possibly handle? So we said a lot there. Tell me, Rodd, what are your thoughts?
Well, what you framed that a lot there with was a perfect setup to everything you just said. But man, you're a coach, not just a financial coach, but a life coach.
100%.
And
wrote a book on
that. Exactly. We want to talk about that.
Yeah.
And the way you framed it was exactly what needed to be said, which is quit doing what this question was a great setup for you. Quit doing what Main Street does, because Main Street ain't happening. Main Street ain't doing it. And yeah, there's a lot of regulation and taxes and stuff that really push down the great middle class. But on top of that, we don't always make the greatest decisions. Why we are in wherever you are in your financial situation, that's why you're there. So quit do things differently. Throw a curve to what is happening with Main Street, right?
Totally. And expect way
love
more.
that.
Expect way more than Main Street. Yeah.
I love that. And expecting 8, speaking of that, 8, 10, 12%. Now we're getting those returns at least 30%.
Yep.
You should be expecting that. I don't think we ever got to a dollar amount with that earlier question I had. I mean, can you start with anything or
anything? Anything. I mean, there's, every firm, at least every US based firm allows you to buy fractional shares of stock. So, if you're looking at a company that trades in the hundreds and hundreds of dollars and you're like, oh, I can't even buy a share. Yes, you can. You can buy a fractional share, just like crypto investors do, right? You buy fractional.
That's so funny. You just brought that up. What do you think of after you're done? What do you think of crypto? Because that is an investment. I got into it a little bit, playing with it. But anyway, going with what you're saying.
So you can start with anything. And like I mentioned, what matters is just being consistent with the amount that you're contributing to every month. And then that's really the key. So
and then build upon that even maybe. So let's say I start with $100 and then the next month or the next week I do another $100 and then another 100.
That's right.
And now you're getting not only the stock, but your cost, you're offsetting by daily different
fluctuation.
Numbers.
Yeah, you don't care what the stock does. The stock can go down 20% and you just bought it on sale.
Because tomorrow you're gonna buy it at 20% off what it was before.
Yeah, people are funny with investing.
In the same stocks?
Yeah.
In the same stocks?
Oh yeah, of course. Same add to the same companies. Yes. Yeah.
Gotcha.
Yeah, just a handful, right? You don't want to be over diversified. But it's interesting with investing because most people, unlike if your favorite toothpaste went on sale, you'd be buying a bunch of toothpaste. Stocks, people get really nervous when they start to drop, as opposed to getting really excited about being able to buy more shares. So that's an interesting dynamic I've noticed over the last
isn't it?
37 years of doing this. Yeah.
It's very, I started understanding that aspect, that comment that you just said, in talking to producer Barbie back and forth, because she's getting into doing the same thing you're talking about here. And it just, what I mean by that is investing in stock. But the whole aspect of buying something, like you said, if my toothpaste was on sale, I'd be stocking up on it because they just put chicken down here, rotisserie chicken for $5. Man, I was all excited. It used to be 19, right? So they had a sale going on. Fortunately, my refrigerator is only so big, so I could only stock up so much. But stocks are the same exact thing. Oh my God! And the way that offsets that mindset, when you're doing it consistently, let's say it's daily, maybe heavy, weekly, you're gonna be buying that. Now you use the word excited. I get to buy it for $20 less a share now.
That's right. Exactly.
Or 20% less or whatever.
Exactly.
Right?
Yep. You got it.
I think this is interesting what Jason asks here. And I assume, because stocks are also emotional, right? I'm sorry. Some of the worst investing in stocks is from an emotional standpoint. Like,
there you go. Stocks are neutral. People are emotional. Yeah, exactly.
So does AI help with that?
I think that's a really good point that he raised, because that's exactly what it does. It will guide you into picking companies. And And if you follow that guidance, then you've removed all the emotional aspect of investing, which is ideal and not always the easiest thing to do.
No.
It's one of the hardest. Like I went through recently, I've just loaded up on silver stocks, silver paper, because it's having this for many reasons, many fundamental reasons, many industrial reasons for silver.
Big time industrial.
It's an asset class that's been suppressed for 45 years. Wall Street kept tampered it down.
Yep.
And now finally it's getting its day in the sun, and it's just getting started. And my portfolio was up, I don't know, I had up 80% in like a week. And I was like, I'm not going to sell it yet. I'll hold on to it. It's going higher. Well, the next day it dropped. I mean, it just dropped like a stone because of the manipulation that they constantly do in the equity markets. And I went for a walk with my dog, and I started out that walk of like kind of beating myself up a little bit. Like, what were you thinking? You were up 80% in a short period of time. Why didn't you just get rid of that thing? You know, it was a substantial profit. And so as I'm walking my dog, and I'm out there, you know, in nature, and I'm walking through this emotional process with myself. And I went from, I realized once I got home, I was going to have clear guidance on my next step with this. Do I sell it? What do I do? And so I'm walking, and I'm noticing my emotions are changing as I'm walking. I'm going from beating myself up to, well, hey, wait a second, but you did take a profit in this other stock the same day, like the day before it was up, same big. Like I picked a drone company, and because, you know, the announcement around all this political unrest, all the drone companies shot up, and the way I handled it, it was like up, I don't know, 100, I think it hit about 110%. I sold it. And I was like, well, wait a second, but you did take profit in that. So, you know, you did a really good job there. And then I'm continuing to walk, and I'm realizing it's all going to be okay. It's silver. It's a company that you know is going to perform well. They're just manipulating the price right now. Just go about your day. And that's the the full emotional circle I went through, from a death spiral to a, hey, it's all good. And today it's now up. It's recouped some of the loss. So, you know, I didn't have to put myself through that. That was my takeaway of like, okay, I'm done with this emotional investing thing of, you know, beating myself up through it.
Yeah, that does not describe a day trader, does it?
Exactly.
So Damien here, is this suitable for retirees? For me, right? Looking for safe strategies.
I put my Sterling stock picker URL in there.
Yeah,
exactly. That's, you know, every retiree faces an even bigger challenge, which is keeping up with inflation. And, you know, inflation is not what they tell us. It's not 2.7%. You know, when you go to the grocery store every time, that prices are continuing to escalate. We've seen it in every asset class, every industry so far, and it's going to continue. So you need something like this more than the person who needs a professional money manager who's going to get you that 8 to 10% a year. You need to stack the deck in your favor. Yes.
That is beautiful. Is Lyft a good buy? This is a good question. I'm a teen, so I don't have much. Oh, okay. Henry here. It's interesting because in every market there are these standouts. You know, there's Uber versus Lyft, and they've battled each other. What do you think? What do you want to tell Henry? Member, low money. What about Lyft?
So I will share my thinking around a good buy for everyone to take advantage of my thought process as I look at asking myself if a company is a good buy. I'm looking at, is the company going to be relevant going forward? So is this company going to be in business and crushing it in, let's say, 5 years. Like we don't even have to go out 10 or 15 years anymore, because that's too uncertain. There's too many variables that are at play here that are out of our control. So when we look at right in front of us, is this company going to be relevant and crushing it in 3 to 5 years? That's the first question to ask. And then if they are, what is going to contribute to that relevancy and ability to crush it? You know, are they going to shift to, like, we know autonomous driving is the next thing, right? Like
That's what I was thinking. Yeah.
Robotic cars, like that is something, you know. So when you look at an industry, you have to make sure that they're relevant today and as well in the future. Are they going to iterate their business model to adapt to, you know, the way things are going? Hey, look, Henry, instead of Lyft, maybe you look at a company like Rich Tech Robotics, which is in the automotive space, robotic space, autonomous driving, and they're $3.50 a share. You know, like maybe that is an opportunity, right? So I think, you know, oftentimes we want to look at these big names, but really take a step back and look at what is the contributing factor to enable autonomous driving. Well, it's robotics, it's logistics, it's you know, everything that goes into that particular industry. And that, I think, is the way to really scale this investment strategy today.
Good point. You know, and I was just listening to Elon. I don't know if you're a fan or not, but Elon Musk, speaking of Tesla, but he was saying that he's going to be making an announcement about a humanoid robot. I forget what he called it, but I mean, robots are here. They're here. Autonomous driving is here. Robots are here. I have a lane on this, which this falls into that lane. Well, it actually falls into 2 lanes. There's finance, and then there's AI, right? Yeah. And AI is coming so fast, and it's not going to slow down. It's only gaining speed. What it does. I relate it. You talk about us old timers, back in the, what was it, 80s, late 70s, 80s, where internet actually started to come in, you know, the old dial-up stuff, computers. Yeah. People my age at that time, there was a huge amount of depression that came on. My Facebook just dropped out. It's bad. Remove. Oh, come on. Sorry. But because they were separated from society to a degree. I mean, it was kind of like almost a COVID for them, because everybody else had email, and, you know, the mobile phones started to come. They started out this big, or in a suitcase, or hardwired to a car. But people didn't, my age at that time and older, were literally separated from society. This is that on bionics. I mean, on you know, huge, much more. So, you know, AI is coming fast. It's coming hard. And for people that aren't getting into some of these advantages, they may survive, but they're not going to thrive. That's right. And that's why all these discussions are so important. And what you're talking about, because you're cutting a lot of fat out of the process. By having, you know, a stockbroker, you know, as my person or whatever, and getting 8-10%, when you're now using AI to thrive as an old person, a retiree, you know, all of that stuff. It's fascinating how this is all kind of coming together, big time.
Yeah, good point.
I wanted to bring in. Not that one. Sorry. That was an awesome question, though. And I want to hear more about that stock. I look forward to talking to you in the green room afterwards. I'll pull your contact information in a second and pull it over into the chat.
Sure. Okay, great. So our Northstar ranking is our coveted system that we built.
That's a big deal.
It's a big deal. And it is, so when we were mentioning our 5-star rated stocks are outperforming the indexes by 67%, that's our North Star. That's what we're referring to as our North Star ranking. And a five North Star ranking is a strong buy. So if you're only looking at companies that are 5 stars, then you can pretty much take it to the bank that you're going to make money with that stock, because we've looked at the fundamentals, we've looked at the financials, we've looked at the technical indicators. We overweight the technical indicators because I've noticed by doing this for 37 years that the trend is your friend. So we're identifying companies that are trading, above their moving averages as opposed to below, and just a really nice lift off with companies. So if you've got our North Star ranking is key for new investors. That's because it takes the guesswork out of it. We'll show you companies that are strong buy rating, and if that changes, if the North Star ranking ever changes, you get an email sent to you. And they change often, so you'll get those emails almost on a daily basis, or text, whichever you prefer.
Very nice program. Very nice program.
Thank you.
And it goes to the way you just said that goes to what Kevin said or asks here. How much now? I'm assuming he's not talking about an investor who's outside of your platform or your program or your community. I'm assuming he's talking about how much time does a regular user need to manage investments. So with you, you say a handful. That's a baker's dozen-ish, something like that.
Yeah, like 8 to 10 companies, ideally. You'll have like 5 in your base, 3 in your growth part of the portfolio, and the accelerate is like 1 or 2. Those are the high risk, the really rocking stocks. And then when it hits certain goals that you've set for it, what happens is we recommend that you funnel money from the profit into the base. You always want to build the base, a very solid base, because when you have a solid base,
you're going to keep your base all the time and then move maybe the other ones.
That's right. That's right.
Keep
those
5.
You keep adding to them. You keep those 5. You keep them growing by adding money on a regular basis to them. Exactly. And then you'll find the new companies in the growth and the accelerate part. We'll do all that for you. We show them to you just by one click. And so minimal. I would say minimal. I think, Kevin, it really depends on what your goals are and how interested you are. Yeah, I had a client call me yesterday, and she's in one of my group programs. I teach an options program where I share, what stocks to buy every week and what option contracts to sell. And we're just crushing it in there. Like, it's done so well. And she said to me, you keep telling me to look at my stocks. She said, I have no interest in that. I said, well, fine. You don't need to. Just keep showing up for the calls and keep doing the trades if that's working for you. She said, oh, it's working for me. Okay. She knows she's doing well.
So that's not many hours a week at all.
Not at all. No.
I mean, basically none. What's your webinar? An hour long?
It's 1 hour. Monday? Exactly. 1 hour every Tuesday.
So she's spending maybe a couple hours at most a week doing it.
She's just spending the 1 hour that we meet every week.
Literally 1 hour. That's it. She doesn't even look at the other stuff.
Yeah, she's like, I have no interest. I said, good, then don't worry about it.
But she's still going on vacations and buying new shoes and probably getting ready to buy another house, right?
Yeah, she is looking at another property. That's exactly right. Yep.
Oh my,
that's exactly right.
Oh my God, that's awesome.
Yeah.
All right, let's wrap this up. By the way, that's correct.
That is correct. Sterling, my last name, sterlingstockpicker.com is where we're at. Yeah.
And that is your website. And in there, we can get a lot of information as far as how the program works, more than what we talk. I think we got a pretty good cover over how that program works, because I was really trying to figure that out and all that. You got a really nice platform. Obviously, you do. You know that already.
Thank you.
I'm not saying anything, but Anita wants to know, what should first-time investors focus on before AI tool? That's an
Yeah,
interesting question to
that
me.
is an interesting question. Thanks, Anita, for asking that. And, I think I'll go back to the blueprint. Focus on your blueprint. Script out what you're looking to achieve
Ah,
with your investments. Like, what's the end game here? Like,
well, you do that also, right? In your
yeah,
I'll call it onboarding process. You're doing that. I mean, what Anita's saying there. Uh, but if I'm doing it on myself, you go ahead, finish with what you're saying, because this is
yeah.
what you do in your
This is
process.
like, this is like, here's the coaching hat coming back on. Pen to paper, like pen to paper. What do you want from this money? What do you want it to do for you? And I think that's where you start before you jump in with investing in a stock or using AI tools is, what's on your heart? What's important to you? What is that thing that's going to make a difference in your world or in other people's worlds? Maybe you're, like whatever. I think that's where you start.
Yeah, and we are human beings. Why I use the word the human experience. We are a species that it has emotions, has feelings. Not that other animals don't, but we do. So we're talking about us.
Yep.
And at the end of the day, we're really driven hard. What you can see and what you can believe you can achieve. That's basically what exactly we're talking about here. And it's so true. I mean, I love to use these examples. Look at what science fiction was 20, 30, 40 years ago.
Mm-hmm.
It's what reality is today.
That's right.
I mean, it's because movies, I think, well, a good movie is a good movie. It's just a great thing to get lost in. It's got to have great acting and great writing. But aside from that, it's a great forecaster. You know who the best forecaster is? The Simpsons, for some reason. They get everything. But a good movie, literally, I mean, it tells you, and the reason I say that is because, somebody's thinking it, somebody believes it, and eventually you achieve that. Right?
Or someone was told what to show on the Simpsons show. They're getting direct intel from the powers to be. Like, there's just too many coincidences. There's too many.
Isn't it crazy?
Yeah. So I think they're getting a little. They got the little microphone in the ear. What to do?
They got to tie into the politics of life.
Absolutely.
They nail weird, crazy stuff.
That's the only reason why. Yeah.
Nail it. All right. So you've still got well over 300 people here, closer to 4 than 3.
Nice. Thanks everyone for showing up.
Yeah. And thank you. I mean, they're here for a reason, and I love it. They're here for a reason because they want to know. So, and great questions, by the way.
Yeah.
Folks. Awesome questions. But also they're investing their time. And I love it when somebody comes on here that's an expert such as yourself and fills that time, because this is their time. They're giving us their time. Yeah. And I honor that.
Me too.
Because it's the community. And it's great to have such a beautiful, I mean, this was like not peel back the onion. This was peel back the flower. This is a beautiful flower because it wasn't just a money discussion we had just now. It was a life discussion. It was a full human experience discussion. And I appreciate that, man. Josh.
Yeah, my pleasure. I do too. I appreciate the opportunity to share this information. So thank you for that. I'd love to come back on. We should do a follow-up, Rodd.
100%, Jaden. We're definitely going to do that. Nice. I definitely want to do that. I want to get into some of the other things that you were talking about, your book and some of the coaching aspect of what you do as well.
So I do want to mention, because I never mentioned this, I must
bring it on, brother.
I must have 8 guided meditations on Apple, on Spotify. Like I've recorded, how to remove money blocks. I've recorded meditations on how to connect with the energy of money, how to receive.
Dude, seriously?
Yeah, my last recording was mastering the art of receiving, because so many people struggle with they're great givers, but they just really struggle with receiving, right? So
Mhm, mhm.
yeah, I record. So anyway, those are out there. If you have Spotify, you don't pay anything to listen to them, but check them out because they have changed people's lives for the better, for sure.
Where, okay, so they're on Spotify. So I go
Spotify,
onto Spotify and what do I put in?
just type in
Your
my
name?
name, Jaden Sterling. Yeah,
Okay. All right.
yeah.
All right. Yeah, I'm gonna do. You know what?
Check
I've
it out.
never done that. You know what? I found out the other day because we're growing. We got like 20,000 subscribers across our social media
Nice.
in a year and a half.
Good
In
for
a year
you.
and a freaking half. Yeah, it's the message is coming out, and
Yeah.
it's because of people like you. I'm the. You use the term. I'm the bumpers in the
Yeah.
alley in the bowling game.
Yeah.
I'm just a bumper and just kind of keeping it going down the folks like you and honestly this audience. I mean, they're
Yeah.
fundamentally uh, better than me in
Nice.
all aspects of everything.
Yeah.
So
Humble guy you
so
are. Yeah.
thank you. Yeah, I definitely want to have a follow up. I want to stay with this and maybe lean in a little bit more, kind of the opposite of what we did, right?
Yeah.
You leaned in a little bit to the coaching aspect, and
Mhm.
now the voice, the meditation, but and then lean a little bit into, and that brings you money, right? I mean,
Exactly.
something like that. You want to
Yeah.
flip flop it next go around?
Do it. Yeah, I'd love to.
Click it. That's an AI tool. It clicks tapes. So if you've heard me a couple of times, I say click. You know what I just said?
Gotcha.
It'll go back 30 seconds, cut that clip out, and I can send it off to my social media.
Neat. Oh,
Cool
that's a
AI.
great tool. Love
AI
it.
is awesome. StreamYard, who I use for streaming, uh, just introduced that. I just did a webinar. I attended a webinar on it yesterday. It's pretty awesome.
That's neat.
I'm playing with it. So any last words before a big goodbye, and I'll throw you in the green room and meet you back here in a
Yeah.
second while I close out.
Sounds good. Never too late to get started. And you only have today. There's a sign that hangs in an English pub that says free beer tomorrow. Does anyone ever get free beer?
Never,
Never.
because you come back tomorrow. That sign's still there, brother.
You got it. Thanks, Rodd. That was fun.
That was a lot of fun. Thank you very much.
My
And
pleasure.
I'll see you in a second. Give everybody a big wave.
Yeah. Yep. Bye, everyone. Thank you.
All right, click it. So wow, that was everything I expected it to be, and more than I expected it to be. So as we close out today's conversation, it was awesome, wasn't it, folks? I loved it. I want to slow this down and bring it home, because everything we talked about today sits at the intersection of money, freedom, and confidence. And as we saw, emotion as well. Money is not it's not the destination. Freedom is the destination. And that's why this conversation was so important today with Jaden, because it's a whole package, and it's basically reinventing your life. You know, freedom is that end goal, right? And how we get there. And confidence is the bridge between the two, right? Most people are not trying to beat the market or chase some unrealistic lifestyle. They're trying to stop feeling anxious, right? They're trying to stop second guessing every decision, and they are trying to feel like the future is something they are shaping, not something that happened to them. Sorry, let me pull that off. What holds people back is not the lack of intelligence at all. It's a lot more than that, guys. You know, it's a lack of clarity. When systems are confusing, right? People freeze. When risk gets exaggerated, people have a tendency to retreat from that. And when education is hidden behind jargon and gatekeepers, confidence erodes. That confusion has been profitable for some, but it has been costly for everybody else. What today's conversation makes clear, at least to me, is that no longer does it have to be true or be the case. It doesn't have to be confusing. You do not need to become a finance expert. We saw that. I mean, my God, I'm excited. You do not need to stare at charts all day. Thank God. And you do not need to guess. What you do need is understanding. You need tools and frameworks that explain instead of intimidate. You need what? Transparency instead of noise. You need the discipline to think long-term instead of thinking emotionally. That's where confidence is built. And when financial confidence shows up, it does not stay confined to money. It changes how people show up at work, like I said in the opening monologue. It changes how families plan and communicate. It changes how stress shows up at home. Did you get that message today? Because it changes how people engage in their communities, and that's real freedom, not escape. There's no shortcuts, folks. There's no shortcuts. We're not giving you hype here. Freedom is knowing where you stand. Freedom is making decisions, well, on purpose. Freedom is no longer outsourcing your future to fear, complexity, or somebody else's agenda. And that is why this conversation matters so deeply for the great middle class, because when everybody or everyday people understand how money actually works, something powerful happens. Well, they stop reacting and they start choosing. They stop feeling behind. They start feeling capable. That's the quiet shift that changes families, neighborhoods, and generations. Now, I want to be very clear about something. Insights and Straight Talk is an independent media. There are no corporate scripts here. There are no financial institutions telling us what we can and cannot ask. No pressure to sell fear or outrage. This show exists because of partners, sponsors, and community members who believe in education, transparency, and long-term thinking. Sponsors who understand that clarity builds stronger families, that informed people just make better decisions. Like Jaden said, don't be Main Street, man. Ain't getting it. And that confidence is good for communities, not something to be exploited. If you believe in conversations like this matter, here's how to support them. Subscribe to our YouTube channel at Rodd Duff 1939. Join us on Substack, insightstraighttalk.substack.com. That support is not symbolic. It directly allows us to keep this show independent, accessible, and honest. So it allows us to bring guests in who are not here to teach. They're here to teach, not pitch. It allows us to ask the questions many people are thinking, but rarely heard asked. If you are a business owner, an organization, or a community partner who believes in financial education, confidence building, and real conversations, we welcome sponsors to align with that mission. We're building something intentional here, not louder for the sake of being loud, clever. Insights and Straight Talk exist for one reason: to replace confusion with clarity, replace fear with understanding, and passivity with confidence. This is not about getting rich quick. It's about getting, steady. It's about building freedom, one informed decision at a time. Thank you for being part of the conversation. Thank you very much for supporting all independent media. And thank you for showing up curious instead of cynical. We will see you next time on Insights and Straight Talk. And with that, I am Rodd Duff, your host, and I am out. Stay at the end. The outro will be something I'll throw.
Before you leave, if you'd like to watch another one of the podcasts, click the first link in the description. We love having you here and we appreciate all your support.
And with that, producer Barbie and I are out. Be confident.